daily traders. Welcome to IFC Markets. You are watching weekly market overview by IFC Markets. Let's start. The US dollar weakened last week against all major currencies except the Australian dollar. The Japanese yen gained most, having accumulated a considerable correction potential in recent months and having strengthened by 3.2% last week. The European currencies also showed synchronous growth. The British pound and the euro gained 2.3%, the Swiss franc 1.8%, the Canadian dollar rose by 1.6%, the Australian dollar fell by 1.1%, while the US dollar index lost 1.9%. Several strategically important events for the Australian dollar took place last week. First, the meeting of the Reserve Bank of Australia, which left its key rate unchanged at 2.75%. Second, the release of Australia's GDP data, which fell short of expectations. In annual terms, the economy expanded by 2.5% in the first quarter instead of the expected 2.7%. Third, foreign trade data from Australia and China showed trade activities falling in both countries. As a result of all this, we see the Australian dollar at 20-month lows around the mark of 0.9400. It seems the key point is coming for the Aussie. It is very close to the 2011 low of 0.9387. Below that mark, only 30-month lows are seen, and probably a way to 0.900 will be open. The technical picture is not in favor of the Aussie, but indicators suggest of a salt. There are signs of divergence. That is why we do not rule out that the next corrective wave may happen right now. The European currency feels confident after the meeting of the ECB and Mario Draghi's comments. The regulator has left rates unchanged, and the head of the bank hoped a gradual economic recovery in the Eurozone, a definite plus for the euro, which reached a 3-month high at 1.3304 last week. Herewith, technically the pair does not look overbought. And this is despite more serious than expected GDP drop in the region, minus 1.1% in the first quarter. However, in the medium term, we expect the initiative returns to bears. In our view, the US economy will sooner return to stable growth than the Eurozone. Mechanisms of stimulation would be turned off sooner, and this is already a serious factor of support for the dollar. In this regard, we are biased to consider rallies toward 2013 high at 1.3710 as an opportunity to take strategic short positions. One of the most discussed topics of the previous week was the release of employment data in the US. The number of non-farm payrolls rose to 175.000 in May, which is slightly more than analysts expected on average. The figure is not bad at all, except at 2 points. Unemployment rose from 7.5% to 7.6%, and the April's figure of payrolls was revised downwards by 16.000. Still, it was enough to support greenback. On Friday and on Monday, the dollar managed to recover some ground against the measures. Among key events of this week, we highlight the Bank of Japan meeting and the press conference of Kuroda, the head of the bank, on Tuesday. On the same day, data on industrial production in the UK in April will be released. On Wednesday, we are waiting for April's employment data in the UK. On Thursday, May employment data in Australia will be released. Here we should pay special attention in case of surprises, since the data may really become a strong driver for the Aussie. Also, on Thursday, we are waiting for US retail sales reading for May. Finally, on Friday, see data on inflation in the Eurozone and on industrial production in the United States. Indicators of market sentiment calculated on the basis of Commodity Futures Trading Commission reports are still showing markets are bullish on the US dollar. All major currencies have net short position versus the US dollar. The Japanese yen has the largest short position, followed by the euro and the British pound. A growing number of short positions appear on the Australian dollar, which ranks the fourth. The list is concluded by the Canadian dollar and the Swiss franc. However, it is worth noting a significant reduction in the value of short positions on the euro last week. The most significant change in positioning, equivalent to 5.2 billion US dollars. For us, it is a confirmation of that now it may be too early to take a strategic short position on euro dollar. So it was weekly market overview by IC Markets. Do not forget to subscribe to our YouTube channel and follow us every Tuesday. Bye.